All right, guys, so this is the intro to liquidity class. So the main topic is going to be liquidity. Okay, what is that? Why is it important? What does it mean? You need to drive home that liquidity is absolutely everything in the markets. It's absolutely everything. Okay, this is simply why price moves. It's going towards liquidity. Now, when you hear the term liquidity, a lot of people at home, they probably think liquidity is like, you know, how much money do I have available, right? How liquid is my bank account, right? You've heard that before. Well, liquidity, the way I want you to think about it in the stock market is basically where a stop loss is resting, right? Where do people have orders sitting and so forth. In a nutshell, liquidity is going to be basically all your highs and lows on the chart. All right. These are all significant areas, some more than others, but it's going to be all these highs and lows. These all have stop losses resting around them, right? This high has stop losses resting above it here. This low right here has stop losses resting below it here. And the thought is that price is ultimately seeking, right? It's attacking, it's going for this liquidity because it needs liquidity to move. It's hunting for it consistently. It's trying to grab it. It's trying to engineer it. That's a whole nother subject, right? The ultimate premise for why price moves is liquidity. You really have to understand this, okay? And it's really going to save your ass, and it's really going to help you make sense of why price moves to certain areas on the chart. If you see a lot of your favorite trading gurus, or you see me trading and stuff like that, and you're like, how the fuck does he know price is going to go there, right? How does he know that? It's because there's a good understanding of liquidity. So let's go ahead and start going through here and start marking out some highs and lows and kind of talk about why price is going there. So when it boils down into a nutshell, there's really two types of liquidity. You have your liquidity that's going to be on the upside, which is also known as buy side liquidity or BSL. And then you have liquidity that rests on the bottom, which is going to be your sell side or SSL. Now it goes an extra step further. You also have external and internal liquidity. Really, one way to keep it simple is this. Kind of narrow your focus on where you're trading. So right now I'm on the 5-minute chart, all right? And this is pretty much all I can see on my screen. So you try to think about, relative to where price is currently trading. This is live. This is where price is currently active. It's 9:10 p.m. Central Time, April 29, 2025. Price is trading here. So if I want to mark external and internal liquidity, this is just one way to kind of help categorize it. External is going to be anything on the way outside of your charts, pretty much the outside bounds of where you're trading. So I'm trading right here. What's the most southern point I can see right now? Right here. That's external. What's the most northern point I can see? Right here. That's external. Now what internal is going to be is everything inside, right? Everything in between. So this is internal buy side liquidity. Right here. Internal buy side liquidity. Right here even. Internal buy side liquidity. Right here. Internal sell side liquidity. Internal sell side liquidity. All these lines I have marked have stop losses sitting below and above them. This is on purpose. Some of this is set in on purpose so price can come and attack it later. But all of this is here so that you have an idea of where price could be heading. Now, the key word there was could, right? There's a lot of factors that are involved with liquidity. You can't just look at highs and lows and go like, all right, bet we're going to go to one of those. That's a good thought though. We are going to go to one of those, but like, how do you get better at predicting, which one you're going to go to? So there's kind of key factors you want to be thinking about when you're considering liquidity, things such as imbalances. Okay. And this is a subject for another day if you're not familiar with these, but fair value gaps, right? Imbalances. You want to take into account order flow, right? Is price bullish? Is it bearish? Are we pushing up or down, right? Let me give you an example right here. You see how price is pushing down right here? And I have external liquidity, right? I'm right next to it. There's a pretty good chance like price is fucking going here, right? It doesn't have to, but it's very likely, right? Because we're close to it. There's a reason why we're moving like this. Nothing is on accident in the stock market. It's not just because people are hitting buy and sell and the shit's moving. That's not why. It's ultimately being driven by algorithms and millions and billions and trillions of dollars that we don't really control. We being the retail, right? We're known as, kind of breaks down into two in the stock market. You have the retail traders and you have like the big banks, right? The big banks, the prop firms, the hedge funds. Those are the motherfuckers that move the markets. We contribute to it. So order flow is another factor. Another thing you need to be thinking about is time. Time is huge. You're going to learn this more and more as you get into trading. But there are certain times of the day that price will be more energetic. It will activate. It will have more momentum. There's certain times of the day where price is going to go seek an objective intentionally, right? So let's say I'm on the 5-minute chart here still, and I'm getting close to a certain time of the day. That may give me more confidence, but that we're getting ready to go here sooner than later, right? That's where the time's going to help. Right now, as I'm making this video, I'm pretty confident that we're probably trying to go here, but I don't know how soon. But if it was a different time of the day, I would have a lot more confidence that it's probably going to be sooner than later, right? In the next 5 minutes, in the next 10 minutes versus in the next 3 hours, right? This might not even happen until I wake up. I don't know, right? It might happen overnight, or it might not happen at all. So there's a couple factors you need to keep in mind besides just, hey, let me mark highs and lows and just see where price goes, right? You need to think about the other things that are on the way, such as fair value gaps, right? All those other things, order blocks, right? Things I haven't taught you yet, which I will be teaching you the next couple days. So that's liquidity in a nutshell. Now let me show you how liquidity kind of works. I'm going to show you the strongest forms of liquidity, and I will leave you with that and some homework. Okay. That'll kind of be your homework. Go find these levels, pull up the charts. A lot of, a caveat that I always offer when I'm teaching stuff is that I can only show you so much. I can show you as many strategies, edges, all this stuff, indicators, but at the end of the day, you need to put in the chart time. You need to get off your ass, pull up the chart after the lesson, during the lesson, whatever, and start looking for the shit yourself so that you start seeing it more and more in real time, and it makes a lot more sense. And then you have a lot more confidence, right? Me, with my experience, I have enough confidence just to sit here and spend 5 seconds looking at this and going, hey, we're probably going to go there, right? I have a lot of confidence in that because of things I've seen, because of how many times I've seen price get near a level like this, considering all the other factors such as the fair value gaps, all that shit, right? And that's something I want you guys to start adapting. So liquidity is important to understand, and I kind of want to show you how, it really tries to trap people, more or less. Let's go to this example right here. So we talked about highs and lows being liquidity. You have a low here. We have a low here. Let's just take these two, for example. So price makes a move like this, okay? If you don't know how to trade, or if you don't know what the fuck you're looking at, I guarantee you people who don't know how to trade, they're going to look at this, either that low getting taken out or either both lows getting taken out by this is a red candle for most people. Mine's black. By this big red candle, they're going to see these lows get taken out, and they're going to be like, oh shit, like this thing's getting ready to dump, right? We just broke this low, right? That's the typical conventional wisdom, right? We broke this low. Look at this big body candle, glizzy candle. We got to keep going down, right? Wrong. You have to have a better understanding of liquidity, right? Because I'm telling you now, this move is actually going up, right? Right after we have a big dump like that. Why is that? Because the market is taking out liquidity, so it has fuel to go higher. There's a reason why we boosted like this. It's not for no fucking reason, right? It's the factors I mentioned, the order flow. We were pushing up prior to slightly. It's the imbalances, right? The fair value gap that we disrespected here. It's the time of day. There's factors contributing to more than just, hey, this red candle just flipped and then we boosted, right? Because we tapped into liquidity. That's not enough, but it's definitely the premise. I'm going to dive into a few tips here and leave you guys with some sauce, okay? Now, this will be recorded and posted. I'm going to be uploading it to YouTube. Now, being that this is going to be a free public video, I'm going to limit the amount of information I give, but I will give gold nuggets as usual. These are the key liquidity levels that I like to look for, and these are known as pretty much the strongest areas where price is going to gravitate towards. It's going to be like key levels. So let's just say key levels, aka highs and lows. Like significant levels, okay? Like dumb, obvious fucking levels on the chart. Like let's do an example here. So I'm on the 5 minute still. If I zoom out, like what are the most obvious fucking things you see right now, right? What are the most obvious levels? This low right here, this, right? Anything that's the most outstanding are going to be very significant levels. Those are going to be very strong areas for price to go towards. Okay, so key levels. My favorite is going to be equal highs and equal lows. And then on top of that, let me just jump right into relative equal highs or relative equal lows and relative equal highs. All right. So key levels, so significant highs and lows, equal highs and equal lows, and relative equal highs and relative equal lows. So those are strong draws. And then I'll give you one more. Let's do this. Session highs and lows. All right. So you're probably KP, how do I find all this shit? This is a lot. Well, I just went through the first example, right? Key levels, right? Dumb, obvious levels. Just keep trading simple. If it doesn't stand out to you, it's probably not significant. Okay. It's that simple. Let's do a little bit more here. And you know, one little tactic I use too, if it's not obvious enough, zoom out, go to the higher time frames. So here's a key level here, right? That's significant. Key level down here, that's significant. Kind of just go with your external highs and your external lows. Those are going to be your most significant levels for price to go towards. Okay. The next one's going to be equal lows and equal highs / relative equal lows and relative equal highs. And I'm going to show you guys, this will make a point how like liquidity is everything and how engineered the markets are, right? How artificial this shit is. So let me zoom out real quick here. This was an example from today, this morning. One thing I noticed on the chart is that price formed these equal highs right here. Do you see how like almost fake this can be sometimes? These equal highs right here. And you're probably asking like, how do I know that? Well, one, you can physically look at them. Now, sometimes they're not exact. The more exact, the better. And then how do you check what the price is? When you hover over the candle, you have this open high low close value up here. Look at the high on this one, 19,539.25. Look at the high on this one, 19,539.25. When you see that, that's artificial. That's the market literally put these two levels in just so it can come get them later. This is why equal highs and equal lows / relative equal highs and relative equal lows are probably my favorite levels to target, because price is going to go to these things. It's artificial. It's fake. You got to think about all the trading that happened here. Just think about it. Millions of dollars being exchanged. All the trading that happened within all of this here, just for us to put in these two exact levels, AKA resistance level there. So dumb, obvious, so engineered. And I'll show you how and why, right? Because shortly after we form that, look what price does. So price comes down, it's seeking liquidity so it can grab fuel to go higher. Boom, right to it. And let me add a little bit more sauce to this. Not only did it go to this level, it went to it effortlessly. Do you see the momentum here? This is intentional, guys. This is intentional. Why did it boost like this? And why did it boost like that just to this spot? Because after the fact, it kind of chilled out, right? Why? Because there's equal highs resting there, okay? And now the final one's going to be session highs and session lows. Now there's indicators I have for this. I will share this with you. But this one right here, this is one I really like to use. This one's pretty dumb, you know, clear. It's not too messy on the charts. And I just flicker it on and off like this. So these are going to be your session highs and lows. So the way you're going to do this is for New York, that'd be New York high. Down here, this would be New York low. For London, this would be London high, and this would be London low. And then Asia high, and Asia low. And if you're not convinced these levels are significant, what have you noticed about all these lines that I've drawn in just now? Price has tapped into every fucking line. Okay. So when you're trading in the middle of the day and you're like, man, like KP's lesson last night, like what the fuck? Like I get it, but I don't. Like, how do I find examples? Bro, if I'm in this trade right here, right fucking here, in this example, right here, and I'm in the middle of the day, bro, you have relative equal lows right here. That's a strong draw on liquidity. You have a significant high up here. And then you also have that New York high. So this now has narrowed my focus on trading. I don't need to think too much about all this other shit going on. Don't ignore it. It is significant. But this will really help narrow your focus. You know, I see these headlines every day. Oh, recession, tariffs, all this bullshit. Listen, bro, I don't give a fuck what the market's doing, bro. I don't care. I don't care, because we can make money in either direction. All we need to do is just narrow our focus and catch some moves within the moves. And we're good to go. And then we cash out. We call it a day, pack up our lunch, and we come back in tomorrow for another day. Now that my focus is narrowed, I know that there's areas of liquidity here. Now I need to, you know, use my other factors such as, you know, imbalances, right? Seeing how they're disrespected, order flow, right? Bullish order flow here. We're disrespecting this imbalance. And then I need to observe the levels above and below me to determine where price could be headed next. And look at this. Look at this. Look at these reactions. Price ran straight up to this price. Boom. Oh, that was that level we marked. Look at price ran straight up to New York high. And look at the reaction we got right after the fact. Oh, that was that level we marked. It's not fucking coincidence, guys. Just understand why price moves, and you'll be on your way. So that is going to be your main intro class to liquidity. Liquidity, again, just try to understand why price moves. And if you can understand why price moves, then you already have the edge. And the next step is just, okay, what are the things I need to think about on top of that to get me there, right? I now understand that price moves towards liquidity. I got that. I got the, I got the psychology behind that. I got the philosophy behind that. What's next? Okay, now that I know that, what else do I need to consider on its way there, right? What do I need to consider when price is heading towards liquidity, right? Other factors such as what I mentioned earlier in this video. So that's all I have for today, guys. I hope you enjoyed this video. Make sure you like, comment, and subscribe.